So I have the great pleasure today to actually be both kind of your master of ceremony and MC and actually speaker of this masterclass. So I will dive actually straight into it. Unfortunately, our marketing manager cannot make it today. He is sick, COVID unfortunately, but I have a marketing background so I can cover his role just a little bit. So what are we going to go over today? So we're going to give you a little bit about our journey and our team and how we came up with Storm Partners. I think it's quite relevant to how the space is developing. And then we're going to give you a little bit of some tips, tricks, and insights into both marketing and growth within the crypto space, and also finance, fundraising, and legal and compliance. If you have any questions, don't hesitate, but we want to make this as interactive as possible because we want to be able to, at the end of the day, help you as much as possible. We help a lot of startups, scale-ups, and enterprise clients in this space, so anything we can do to help you, we'd love to do so. And we're not charging for the session, so all advice and recommendations are free. So, are you ready? That's the really big question. As I mentioned, marketing, finance, and legal. So maybe do a little bit of show of hands of what's most interesting to people. So marketing, anyone? Okay, legal and finance, fundraising. Okay, so yeah, quite evenly matched. So our journey. Everyone here, Nicola, Sebastian, and myself, we've been involved in the cryptocurrency and blockchain space now for many years, each one of us individually, but doing our own work on the side. It was always a task of being a bit more of a generalist, having to deal with administration, having to deal with all these tasks that are besides what we're passionate about. And so how we came up with the concept of Storm Partners, which is a one-stop shop to the crypto and blockchain space, is to allow individuals that are passionate about the space, such as ourselves, to be able to focus on what we're inherently good at. So, as you can see, Nicola is our legal manager, dealing with all things legal and regulatory, and Sebastian is our investor relations manager, dealing with all the financial investor relations type stuff. And so, if individually they were to work at a law firm or even found a law firm, or a capital placement firm, they would have to deal with everything that's administrative, the invoicing and all these things, and it distracts them from their main job and what they're great at. And so one of our taglines back in the day is, why hire a generalist when you can have a bunch of specialists by your side? Getting into this space in 2016, 2017, if you wanted to get involved in the space, you might join a startup, a young company, and you'd have to really be a generalist. You join either as a marketing manager and have to do everything. But if your focus or your passion was analytics, for example, it was practically impossible to get a job within that. And so the ability to come all together and offer a wide range of services whereby we're not generalists, we're a group of specialists that have come together to provide services to you. There's also the ability to disintermediate. At the very beginning, there was this agency back in Estonia, this law firm in Malta, and it was very hard to communicate with one another. Everyone would lose time with kind of account managers here, and you'd end up saying the same thing 5 to 10 times to different stakeholders. So having everything under one roof allows you to essentially have one point of contact that can help you throughout all your needs. And so that's essentially where Storm Partners was created and founded. So our real ethos is being that we like to spark ideas to life. So you shouldn't have to necessarily worry about things that you're not so good at. You focus on what you're great at, and we can help you make that a reality. So as you can see, our team is growing. Nicola, as I mentioned, Sebastian, unfortunately, Guillaume is not here and cannot make it. So he can't make it, so I will step in to the marketing shoes now as well. It's like 3 caps, MC, speaker, and now marketing. But when I first joined the space, I was the head of marketing of a tokenization startup that was fractionalizing assets, or at least had the aspiration to do so. So I can give you a little bit of insight here as well. We'll go over 5 main areas of marketing, be it the strategic side, influencers, PR campaigns, community building, and of course, an important one, budgets. So, strategy. This space is so fast moving that most of our clients come to us and they're like, Charles, we want this done yesterday. We want this, everything is so immediate and needs to be done so quickly. And strategy is often one of the ones that we see being neglected more often than not. And it's actually one of the most fundamental and most important parts. Why? Because if you just end up going around and just, okay, let's do an influencer program and let's just see what happens, you're going to see what happens, and most often than not, nothing happens. And so the strategic element here is really, really important, and I would not neglect this at all. So, influencers. Influencers are a very intricate one within the crypto and blockchain space, because some crypto influencers would be able to amass audience sizes and reviews that's even some bigger than some of the largest broadcasting channels in the world, BBC, Bloomberg, etc. They're also the ones that have been able to convert the most, because an influencer has started off as just being a normal person that is there sharing on their social media channels insights. And so you have a more close feel to this person, or at least at the time you did, whereas maybe a media outlet, you kind of see it as a big entity and you don't have a personal connection to them. And so these smaller communities have essentially been, you've gained their trust, and so pushing various content through influencer marketing has helped a lot. The main problems actually that are faced here is that influencers are a little bit rogue. I mean, at least media outlets have some sort of structure in their professional. Influencers are very, very hard to deal with. They don't actually have pricing. They don't want to sign any contracts. Most of the time, they actually don't even want to reveal who they are. And so it's very, very hard to do this. It's one of the ones whereby we would recommend, or at least in our experience, if you would like to engage with influencers on your own, don't approach hundreds and just be like, oh, this person has 100K followers. He's going to be the best person to promote my project. Look at the ones that are actually posting various content that is closely related to what you're doing, and try to not have just various random influencers, but actually ambassadors pushing forward your project. If you have influencers that believe in what you're doing, and actually have some connection to it, they're going to be promoting you in a much closer way. It's also, when it comes to remunerating them, don't just think, okay, I'm going to pay this influencer 1K, 5K, 10K, and they're going to do a great job for me. Try and always use a fixed and a variable standard, whereby set a clear goal and objective. Is this to join Telegram? Is this to sign up to my platform? Or whatever that might be. Make sure that you have a clear objective and that you can measure it. Measuring is really, really important within the marketing space, and it's one that I would definitely highly recommend. Once you're able to actually measure the results, you can give them, okay, for every sign up that you get, I'm going to give you 10 euros extra. And so that way they're actually incentivized with the content that they're going to create to actually maybe do an extra tweet or tell their friends to sign up, etc. And so then you can even use a staged approach whereby, okay, you're going to get 10 euros per sign up, but if you get 10 sign-ups, you will get an extra 50 euros. And if you get 100 sign-ups, we're going to give you this as a bonus. So having maybe even a stairway approach as well to add on rewards really helps. And most of the time, these influencers are quite financially motivated, so they will kind of be enticed towards this. So now if we go on to public relations, and one that is more, let's say, media outlet focused, I think a lot of our clients come to us for brand recognition. They want to be the next Cardano, Tezos, Polkadot, you name it. And they're always like, yes, we need top-tier media presence. We need to really be there and actively present. And so this is one that we get quite often, but sometimes they just want to pay for media, and it's like, okay, we just want to be there. I think here, from a strategic point of view as well, you need to think about, okay, what value are you bringing through what you're going to be broadcasting into the world to the audience? just a random announcement like, yes, we've announced that you're having a partnership with this person or that person. What impact is that on the market, and what are you actually doing with this? I know there's some media outlets here in the room. I know that they don't necessarily want to just be pushing announcements all the time because everyone has something to announce. I think in the age of social media that we live in, we all like to speak not only about ourselves and what we're doing, so everyone has something to say. So thinking about what impact that can have and what is the wider picture, and thinking about how it can benefit not only yourselves, but the audience, and also potentially even the media outlet in question, and how they can benefit from having this awareness as well. So definitely public relations is a great one. Social media and community. Community building is one of the most important ones in marketing in the crypto blockchain space. In my opinion, it's important because you have all these factors such as FOMO, hype. You've probably seen recently with Shiba's increase in price, which is honestly a little bit ridiculous, but you see the actual power that the people have, I think, within the crypto blockchain space. So building a good community here is quite important. This can be coupled with growth hacking, whereby you have the kind of white hat, black hat marketing efforts. Those that don't know, white and black hat can be essentially the more ones that are seen a little bit more maliciously, like buying followers, and ones that are more, let's say, using AI algorithms to get followers. So I would definitely advise against buying followers. It doesn't make much sense. Those individuals that have been in this space for some time seen a lot of accounts being at the hundreds, at thousands of followers. One thing, of course, it does bring a certain brand recognition for those that don't know. Maybe retail audiences, they see it and they're like, "Wow, this is fantastic. There's a lot of followers here." And then if you scroll down in the tweets or in the LinkedIn feed and you see that there are only 1 or 2 people that are liking, everybody can see that there's something fishy there. And at the end of the day, social media is meant to promote your project and support you in what you're doing. And here again, I really think about the value that you're putting forward to your audience. What are you actually bringing to them? I don't ask your audience to sign up on our platform straight away, because you haven't really brought them anything. Everyone wants you to sign up on their platform. So really try to think of an innovative way to bring value. Is that through news? There are various crypto products that bring out daily news, and so they have individuals follow them on social media for a daily following of news. But you can maybe be a bit more creative than that and bring out, be it quotes, be it events, be it even giving away like free merch or whatever that might be, something to really give value before asking it in return. Great, and the last part I wanted to discuss is budget. This is always the most difficult one to mention to any of our clients and partners, is actually that demon question. Okay, so what is your budget? And they're always like, it's not about budget, it's about the value. We can pay if we need to. So one of the things that I would mention is that marketing takes a certain budget. But you shouldn't overinvest to begin with. If you are a small project to start off with, you can use a little bit of a snowball effect. Invest a little bit to begin with, and then start to grow. The worst ones that we see from clients is they just raised money, they raised $1 million, and they're like, okay, we're going to invest heavily in marketing. And then they see things gradually start to build up. They have no more budget, and then it drops significantly. So try and really grow in the right way. By actually just scaling through. So following from that, budgets being very important, I think the next slide is related to finance and how do you actually get the budget in the first place.
So thank you for the invitation. And it's a pleasure to present what I'm doing on a daily basis. So I'm helping basically projects to fundraise. Basically, there are projects that come to me. They have of course, a financial need, and because they have some. So that's what we are gonna speak during this, I would say, presentation. It's because, of course, they will have a project. So we are going to mention this point. and of course to, I would say, develop their project, and I would say to make the project successful with investors. We truly believe that the external feedback is a key in that, because it helps to improve the project and to challenge the project, the idea. Then, of course, the idea I would say you always have an idea and you want it to get live, and you need a clear roadmap for the launch. That's what we're going to speak about. And of course, as investor relations manager, on a daily basis, I have to deal with investors, so I have to do this kind of bridge between my clients and the investor that are looking for specific things. And of course, the legal framework in the finance, and as the space is very technical, is definitely pretty challenging. And as I have also legal background, also have legal and compliance, of course, it helps the clients for reaching their goals. So that's the things that we are going to go through. So basically, we see with various projects that come like every day to us, we can see like a very big diversity in terms of project on the blockchain and crypto space. So it starts, from the solution offering tokenization of the performances of traders. You have also platforms of tokenization that are involved in the ecosystem. As you know, so NFTs, metaverse, all these, of course, projects are coming to us on a daily basis. But that's a challenge also, because the NFTs, you don't have only one platform of NFT platform on the market. You have like plenty of NFTs platform every day that are launching. So for these reasons, it's pretty challenging when we are entering into a project to make our partners, so the client that we help, to make clear, please make your unique, selling point, USP, very clear, because that's, I would say, the really basic to gain the interest of the investors. Of course, if it's not like clear enough how innovative is your solution, it will not, I would say, facilitate to create traction on the side of the investors. That's why on a daily basis, we are here for our clients to help them with their project. We need to understand what the original idea is, because we are focusing, I would say, most of the time on early stage projects. So that's projects that are launching. But with the time, we see that because they have some urgent, we always have, as entrepreneurs, urgent tasks every day. The risk is that with the time, you lose like your end point. On having an external feedback, it's definitely a key to keep this end point, I would say, in mind. Then what we also can see is that one also a mean that's unable to keep this end goal in mind is, of course, the roadmap, because the roadmap is the key element also to see how is your project gonna be I would say, alive, how it's gonna, I would say, move with the time, and what also you need to make it evolving. And that's also like pretty challenging because at the beginning, you have this idea, and with the time you see that it's also changed. When we go to investor and we try to teach the projects, so it starts with the presentation of the project. The goal is, of course, that they can teach directly to the investor their project, so they can see if an investment will be possible or not. And that's where we are here for. It's because when you're dealing with an investor, the first thing also that you're gonna tell, it's something also that the investor will remember with the time. And it's sometimes because we are also in an ecosystem where entrepreneurs are, I would say, pretty also young. I already had some experiences where one of my clients was speaking about to the investor. He, I would say, really wanted. And when the investor came to the point, what can I do for you? My client answered like, I have this need, but in 1 year. So I don't know why in this case he did that, but it's to tell you that it's pretty challenging when you're dealing with investors to be clear in what you're here for. And also, that's I would say definitely something that I would like to share with you. Most of the clients of the ecosystem come to me and say, "Oh, I'm looking also for smart money," but I'm okay. Which kind of smart money are you looking for? Are you looking for like B2B? I would say, for example, expertise, knowledge. Is it like, do you need like networks? What do you exactly need, for example, around B2B? And also, for example, on the tech side, okay, you have a need on tech side, but what specifically? On what could be, I would say, the adapted investor that could bring this expertise into the project? On that informations, you know that of course we can deliver them because we know the investor we are working with, but it's also, we cannot, I would say, replace the entrepreneur that has, as I said at the beginning, a final endpoint to reach, or that we cannot, decide for him. So that's why I think it's definitely a key point. On once we of course we get the interest of the investor. That's between, I would say, the clients and the investor himself. There is a match. Then we are starting with the negotiation parts, the term sheet, etc. And at the end, once it's also signed, I would say, to sign this document, one of the very key issue is also the legal and specifically the compliance side. And most of the time, we see that our clients focus on the I would say, fundraising part, so to get the funds. But once they are in capacity to onboard an investor in the project, they are, I would say, investor not ready. And that's because, as you know, we need to create AML and compliance policies, KYBs, etc. And that's why also we work together with Nico. Thank you for attention.
Thank you, sir. Okay, so my field is legal and compliance, and what I will try to do in the next, like, say, 10 minutes is to give you an understanding of how digital asset regulation works worldwide. I think, so it's really the grounds of my work, but it's also a really innovative matter, and it's definitely something you need to know if you want to operate in this space and launch a project in this space. So first thing to understand is that there is not much legislation around crypto assets. Legislators started understanding this word basically a few years ago. Now there are some provisions, there are some jurisdictions, there is Liechtenstein, there are also some offshore jurisdictions, Bermuda, Bahamas, that have a proper legal framework for digital assets, for digital asset issuance, for service providers. Even the European Union has AML provisions, but a comprehensive legal framework is still something we have to see. But it's important, let's say, to understand how digital assets qualifies in existing legal frameworks in order to understand what are the rules for your business. So the first thing you need to understand is the token qualification. So tokens, they let's say, the starting point is Bitcoin, and Bitcoin is a pipe in itself. But then the space evolved, and this is also probably the main reason for why legislators were finding it so difficult to regulate this space, because it was always evolving and moving, and they were not understanding what was going on. Now we have different, let's say, classifications, different categories of tokens. And in particular, this is why Switzerland is also a leading jurisdiction in digital assets, is because FINMA, the Swiss financial regulator, among actually the first, it was the first financial regulator in the world to publish some guidelines, which are not legislation, but they are guidelines, and they clarifies, okay, according to our understanding of the space, there are three categories of tokens: payment, utility, security. And according to the rights that the token attributes to the holder, we can qualify the token as a payment, as a utility, as a security, and we can so understand how to regulate this and how a business that involves this token in its activity should be regulated and what kind of legislation should apply to it. Of course, I think you have a pretty much understanding of the different categories of the token, so I will not dive in a lot, but just for me to say that still there is not that clear the boundaries between those categories. There are a lot of possibility of hybrid tokens, in particular hybrid payment utility. Security is something a bit different, but still also around security there is a lot of uncertainty, and also most important, it can change. It can change from a jurisdiction to another jurisdiction. For example, you all, I think, know that United States is the most restricted jurisdiction with regard to, in particular, security token. Why? Because United States is a common law jurisdiction. So rather than having provisions that give you a definition, like in civil law, they base on cases. In particular, the case, I would not make the whole story, but the case for qualifying a security is the how we test it. It's based on a sentence of the Supreme Court of the United States. But basically, they apply this situation to a token, and they try to understand if it qualifies as a security or not based on this previous case. And according to the understanding of the SEC, basically every utility token qualifies as a security token. So it's really difficult to carry out a token offering in the United States or with customers from the United States of America, because this is another thing it's really important to understand. So there are two different views about financial market law. Either I'm based in Switzerland, I do my offering in Switzerland, you are from the US, you participate in my offering, so you are coming to Switzerland and Swiss law applies. Or given the fact that I'm offering my token worldwide, I should be compliant with all the regulations of the single country. So if I offer my token in the United States, I should comply with the law of the United States. Also, this matter is not that clear. So you have to, for example, with regard to my clients, usually I suggest them to avoid offering tokens in the United States just for
But I mean, does offering tokens mean that you list tokens in the US exchange, or is simply the existence of the token an offering?
Offering is primary market. So I'm just selling the tokens.
Could you repeat the question so loud for the stream?
Yeah. Okay, I need to repeat the question. Yeah, so the question was if the listing of the token in the US, or I think also in a US-based exchange, means that the US law should apply. So it's not that simple to... Yeah, sorry.
Oh, I didn't mean to interrupt you.
No, please.
I was going to say, what about to a U.S. person living in Switzerland? For example.
It matters the country of residence.
Okay. So a U.S. person living
But
in Switzerland.
okay.
Yeah, with the US, it's more complicated. Yes, the US person living in Switzerland can buy and purchase coins and tokens without any issues, but he is and remains a US person, so you have tax implications.
Yeah, that's also true, because the United States is a particular jurisdiction from many points of view, also from the fact that if you are a US citizen, although you are not living in the United States of America, you have to pay taxes for them. But that's a really special thing
for
for
securities law. If it's a non-resident US person, you're generally okay. If it's a resident US person, then you have an issue.
Okay, but to answer your question, so it's not that easy to say, but the point is this: we have to differentiate between primary market and secondary market. Primary market is the offering. So the token is not listed, I'm offering the token to people. And secondary market is just the trading of the token on exchanges. Actually, secondary market is way more easy, because if the offering has already been made, for example, I do my offering in Switzerland, I also obtain a FINMA action letter which confers the qualification of the token as a utility, then most probably Coinbase or Kraken will accept the listing of the tokens, and it should not basically triggers the applicability of security regulations. So this is really the point, regulatory implications. So given the qualification of the token, you have to understand what are the implications there. Of course, most of the implications are for security tokens. Now in Switzerland, we have a quite good legal framework for security tokens. You can tokenize shares, bonds, whatever. Really, how they built it, Swiss law, is, in my opinion, a clever way. So you can properly have a share in the form of a security token. It's not something different. The share is the security token. And you can have DLT market infrastructure. The last part of the Swiss law around DLT was entered into force on the 1st of August. So now there is the possibility to apply to FINMA and obtain a license as a trading venue for security tokens and also, of course, for the other crypto assets. Otherwise, if you don't offer security tokens, if you offer utility tokens, still AML regulation should apply to you, and you should comply with those kind of checks. Let's say, luckily, AML provisions are quite harmonized worldwide. So basically, the obligations are similar, and what I suggest my clients to do is to trust a third-party service provider, someone that provides full compliance check. They don't have to really worry about it, and they can do what they do in the best way they can, and feel so somebody else takes care about the KYC and KYB. Then there are also other problems with regard mainly to DeFi projects and token, which is collective investment scheme. This is actually a big topic. I will give you some brief insights, but the point is that if the, let's say, value of the token, if the project itself is meant to appreciate the token over time through some means, buybacks, and so on, it could trigger a collective investment scheme. So you have to be really careful about the characteristics of the token you want to launch. Compliance requirements. Yeah, it's a bit, let's say, following the previous topic. So, yeah.
Sorry to just add a few So, either use, so if you're a legal entity in Switzerland and you would like to launch a token, that's one case, and then that token can be listed on different exchanges around the world. That's sort of another step. What if I am just a private individual and I want to launch a token, a DAO, for example? And so first of all, am I then somehow doing something illegal? B, what if I want this token to be listed on Binance in the US or so? And
so usually for the listing of tokens, I agree. Yeah, so he was asking if you are doing something illegal if you, let's say, launch a token which is not compliant or you don't know if it's compliant or not. So let's say this. Illegal means criminal. Illegal and illicit are two different concepts in law. So illicit is something that from civil law you should not do and someone can sue you. Illegal is something that is criminal. Yeah? Criminal, you can really be liable for criminal charges only with regard to, let's say, anti-money laundering. Even the offering of securities without a license is not properly a crime in most jurisdictions. It's just an illicit activity. So if you comply with AML, there is no crime. Then if there are other, let's say, obligations that you don't respect, still you can be liable for fines or let's say, legal claims and so on. But the point is this. When you want, I assist my clients in listing the tokens. When you want to list a token on an exchange, they require you a legal opinion. It depends on the exchange about the legal opinion. Someone requires it to be done by a top-tier law firm. However, long story short, the point is the legal opinion should assess in selected jurisdiction how the token qualifies. For example, if the exchange is based in Singapore, which is also the case, they want to know if, according to Singapore law, this token qualifies as security or not. If the exchange is based in the US, they want to know about US laws. But usually, they ask me as a lawyer to consider more than one jurisdiction. We usually consider, for example, you can consider European Union as a whole, generally, given the fact that it's mostly harmonized financial regulation. Then you consider UK, you consider Switzerland, of course, Singapore, Hong Kong, then depends on the project, depends on also others. Coming back to, it actually is really linked to this because authorization and licenses. In order to understand if you need authorization and licenses, you should understand if some kind of obligations or regulations should apply to your project. And you can understand it only, let's say we start from the first point, according to the qualification of your token. So regulatory risk mitigation measures, this is really the point. So you come to me with your project. We understand that there is a certain level of uncertainty and we want to mitigate this regulatory risk. How can you do it? In Switzerland, there is a really powerful instrument to do that, which is FINMA no action letter. you can go to FINMA, start a dialogue with them, and say, I have this project, these are the characteristics. Of course, the letter we send to FINMA is drafted by a lawyer, so I already, let's say, tackle with them the points that are not so clear, and we try to understand how this token is regulated. Usually the aim of an action letter is that FINMA answers, okay, you are not basically regulated under our financial market law, you can operate your project in compliance if you do this, and that. Or usually most of the times we tell them we want to be regulated as a financial intermediary, we will apply to an SRO, we will do this, and this. Is it okay for you? Hopefully they will say yes. Then there is counterparties due diligence. This is also a really important part. So in particular for private sale and so on, if you have to mitigate your risk, you have to check who are you selling your token to, who are these people, are they qualified investors, are they not, if they are not, are they consumers, what kind of regulation can you apply, also what kind of KYC and KYB checks should you do with them, and also let's say check where are their funds coming from. It may seem difficult, but actually, if you want to do your project properly, you have to do it, and it's possible to do it. Trust me, we do it. And then let's say there is the main point of regulatory risks, and it's actually my duty as a concept to my clients: identification, flagging, mitigation. So I have to identify for them what are the regulatory risks, to flag them, to show them also, of course, what are the consequences of the risk, and then mitigation. So what are the solutions that can help you to mitigate this risk? In a space in which there is this level of uncertainty, it's really difficult to eliminate the risk. But still, mitigation, let's say, is the best is possible to do. And then there is the last part, choice of law.
I have a question. So how do decentralized exchanges apply?
Okay, his question is about how decentralized exchange are regulated. That's a really good question. I have some DeFi clients. They gave me a lot of headaches. It's really difficult. It's really difficult to understand how they should be regulated because there is not, let's say, a main entity that can perform the checks. But still, for example, some client of mine, they were able to implement a kind of NFT that whitelist you. So you can access the exchange only if you are whitelisted. But then maybe you can argue it's not really decentralized. I see that there is a bit of a problem, but still there are some things you should comply with. And in my opinion, anti-money laundering is one of the main ones. And if you are fully decentralized, it's really difficult to comply with.
It does mean that if I launch a token in a decentralized way, so if someone make a token offering or whatever, then theoretically, depending on the law of the country, I would need to consider who are the people buying it.
Yeah, this is correct, because typical case, you do your token offering on Uniswap or a completely decentralized exchange. You receive the money in, I don't know, USDC. Then you have this money. You convert it in fiat, you deposit it into a bank account frozen, investigation against you, you are not able to touch your funds. So, in order to prevent this from happening, you have to use, let's say, other solutions. Or you really do it, let's say, without establishing a company, without that, but it's a huge legal risk for you because you are liable for your taxes. If you sell a token without a company and you fundraise 5 million, then you should pay taxes on the fundraisers. So it's really risky to do that. But choice of law is really something that can help you because there are many offshore jurisdictions that actually announce regulations about token offerings, for instance. Bermuda and Bahamas have a quite similar legal framework that it's actually working. So they are providing licenses. They have even a licensing regime for specific ICOs, so you can basically, they will review your white paper and give you their approval. Still is not there, let's say, the best jurisdiction in the world, but is an approval from a financial regulator that has in that jurisdiction there are specific provisions about utility token, and they confirm you are actually issuing a utility token. And what matters in this case is good faith. So if I did everything I could to be compliant with the regulation I decide to set up in, it's difficult that somebody can go after you and say, no, you did something illicit or illegal. A big insight on choice of law. There is no the best regulation. There is no one that is like, yeah, go for it. Always you should go for this one. We really need to assess the characteristics of your project and to understand, based on your characteristics, what's the best jurisdiction for you. For security token, for example, Switzerland is an amazing jurisdiction, in particular in March. For utility tokens, it depends. It depends really on the token and on the budget you have. Because Switzerland, let's say, for utility tokens are expensive and also a bit long to obtain criminal action letter, but still it can be done. A client of mine is a launchpad. They were based offshore. In a jurisdiction basis, there were no requirements. Now they are based in Bahamas. There is a regulatory framework for them. There are obligations they need to fulfill, but they now are able to operate in full compliance with the regulation. So they established an office there. They have some people there, not all the people, but still some people, and it's working fine. This is how basically to do it. And probably also in the future, in the near future, many other countries and even European countries and so on will enhance regulation about these things because, let's say, small jurisdictions are usually at the forefront because it's easier. The legislative process is easier. To pass a law in the European Union is a nightmare. They have proposed 2 regulations about crypto assets, and still it's probable that this regulation will not enter into force for like a couple of years in this space. A couple of years. Not the person that should tell you, you already know, a couple of years is actually really long time. So yeah, I think that's it. Thank you.
Thank you. I think it's only in Switzerland that the legal part is the most interesting. Wonderful. So thank you so much for listening, and we will take some questions and hopefully take me out.
Yeah, which jurisdictions do you cover that?
So Switzerland, European Union, mainly myself. But we work with partner lawyers in Cayman Island, in Bermuda, in Bahamas, in Singapore, and in Hong Kong.
Does anyone else have any questions by any chance? Yeah, please.
Interested to learn more war stories of fundraisers past. I don't expect you to break confidentiality, but which points in the cycle? Is it the incubation? Is it the liquidity provision? Where did it go well? Where did it go wrong? That's what entrepreneurs often care about, right?
Yeah, of course. So basically, we have like most of the time. So we are not like at this time, I would say, an incubator in the sense that we are in the incubator in the sense that I would say through the services that we are delivering an expertise that is most of the time also brought by an incubator. But a company that comes to us has I would say, a financial need, and we are here, I would say, to connect them to the. It's not. Because it's to give them I would say, the right stakeholder that they would be looking for, and then we can, so on the basis of the connections on the network of investors that we have, to give you like a bit of insights about the points that could be problematic sometimes. So basically, we are I would say. It always has to be a match between like the project itself, the market, and the network of investors. Sometimes where there is the most of difficulties, it's when the company itself doesn't know what's his product about, what will be the next steps. All this doesn't know just to define itself. And we have some cases where the person doesn't know how to define itself. That's on himself, and that's really the problematic points. But we also have some, of course, success stories of projects that successfully arise there.
Maybe a response on top of that. fundraising is really the one where we have no troubles having clients because everyone wants more money. It's really not that complicated. But we often get the case where people is like, here's 10K, raise 2 million for me. I mean, if I could have 10K and I could raise 2 million myself, I mean, I would be a billionaire by now. So it's really not just about, here's money, I want to be able to generate more. You need to really think about, okay, is it the right time to fundraise? I think it was a little bit about what you were saying, okay, am I at the incubation stage? And I think it goes on to what Sebastian was saying before is, what is the timeline? What are you trying to raise and how are you trying to get there? We remember a very interesting project whereby in the crypto space, everyone are like entrepreneurs, they want to make it to the moon and back. And we had one project that really they had in their timeline, their scope of work, that they were going to have an exit. I think quite often in entrepreneurs, they don't really think about the exit. In this company, they really said, okay, you're going to invest at X rate, you're going to get Y equity, and we have these relationships with these large banks and facilitators that actually actively want our product. They've demanded for it. We're just going to build it by ourselves, and then we're going to go and sell it to them. So your X is going to turn into Y in 5 years. Would you like to invest? And we shared that with our network, and they were mind-blown because there's never really this kind of strategic plan for the investor. Because at the end of the day, of course, the investor wants to be passionate, but they're in it for the money as well. So being able to really allow them to visualize that, I think it helps quite a lot. Thank you. Yes.
Question about education and community, and kind of transferring down in this way of all the partners that you work with. Anything that works there? What's the way to communicate what you're doing in an open way?
Yeah, I mean, I think education is really important. I think we're starting to hit kind of critical mass where I got my haircut yesterday and the barbers were talking about Shiba and God. But really, I think education is really important. We see a lot of the way in which, when I was talking about marketing, community building happens through education. I mean, if you teach a man to fish, I mean, then they're going to be able to eat for a lifetime. It's if you are able to educate them, well, then they're going to trust you as kind of like their professor for a lifetime. So we see in a lot of cases when people are building up their marketing strategies, we try to educate as much as possible. I think that's a really big role to play in the space, and it's quite important. I think we operate quite often in our silos. A lot of us have been in the space for some time, and we have buzzwords that we use, and we use them on social and use them everywhere, but when we're communicating to our audience, maybe they don't understand that. So I think being able to educate and being able to make sure that what we're trying to bring out to the world is fully understood is quite important.
If I can add something on education, actually for me, education is really important because I see, it's a bit what Shiraz was saying. I have a lot of friends, they know I work with crypto and they ask me about, I bought this, and then use a shit one. So people still are not able to understand what they're dealing with. And if you are a legitimate project and there is value in your token and in your project, show it. Demonstrate it to people. Show that they can trust you. Otherwise, it's difficult for individuals that are buying cryptos to differentiate between a good project and a scam. And still there are scams that, not as some years ago, but still there are scams. And they ruin the game for everybody because then people lose confidence in crypto. And also regulators, they are really keen on finding new scams and then say, yeah, you are all criminals. And so education of your public, of your own communities, it should be a priority for everybody.
And I think that's where kind of media outlets such as CoinDesk come into play to really be able to establish this in the market and be able to help people that want to get involved, such as my mum, to be able to really understand what she and everyone else is doing.
I wanted to ask you, in terms of the clients that come to you with that specific projects, how do you do your own due diligence to take those clients where they want to? Like, how do you assess, okay, yes, we like these guys, we're going to help them reach what they want, and don't really like these guys because they're
actually, it's something that we have discussed many times since we have started Storm Finance. We start with it. It's the first thing we do. You want to work with us? Okay, we do a regulatory assessment of you. So the first thing we do is a due diligence on you, but even, for example, sometimes it's not even their fault. So I have clients that are, let's say, a group of young developers that came out with an idea and a token and whatever. And then I said, okay, let's do a regulatory assessment. Let's look into your idea. The idea is not a scam, okay? But still, maybe it's a collective investment scheme. And I tell them, look, guys, to be regulated as a collective investor, like as a trustee or an asset manager is really complicated. You have to be aware of this. And they tell me, okay, but maybe we can incorporate in some like shady place in which nobody is able to track us and do it. And I tell them, okay, bye-bye.
Maybe if I just bounce off on that, I think there are two things. I think firstly, there is a little bit of gut feeling. I mean, we have been in space for quite some time. You can tell if somebody is there's something wrong in what they're saying. And then I think the other side of it is things aren't always as they seem. So the best scammers are the ones that you don't even see that they're scammers. And sometimes there are ones whereby they look like a scam, but maybe they just don't have the ability to market their project. I just came back from Dubai, and when I first landed there and going into the conference, I was like, wow, this is the land of scams. And then I was speaking to a colleague of mine, a Swiss colleague as well, and he was saying, well, Trust, they're not necessarily all scams. They just might not know how to show themselves and to communicate in a Western professional way. And so when he told me that, I thought it was quite interesting because a lot of these, as Nicola mentioned, can be young individuals. They might be techies. They might not know how to do the full suite of services they might need. And so they might have an appearance to be a scam, but they aren't. They're just young people that want to boost their project. So I think there is this element of evaluation that starts, be it in the legal department, as Nicola mentioned, but we do this also within the finance and fundraising department, whereby before a client is even able to touch our investor network, we go through both internal and external audits. And the same within marketing. We really develop a whole strategy before even committing to anything mechanically. So I think through those ways as well.
And I think, if I can add something, there is also a second part of the story, and this is actually that really happened. So I told them that, so it was a project that was really difficult for them to get regulated because they were afraid. Like the characteristics of the token, in my opinion, was a kind of investment. So I tell them this, I tell them, guys, if you want to do that, I cannot help you. 2 weeks later, they sent me another email saying, please, can we have another call? We had another call, and they changed their mind. They said, okay, but no, we want to do it in a proper way. So one thing is to select a jurisdiction, because in that jurisdiction there is a legal framework that is better for you. One other thing is to escape on an island. They are really two different things. The first thing is the correct use of law. You can use the jurisdiction which is better for your project. The other one is an abuse. And maybe from the external point of view, the difference is not that clear, but for me and then for regulators as well, there is a really clear difference.
Well, last week I was in Lisbon at the conference where I met some people with it's called PyDAO. It's a DAO that it is sort of a committee that can make investment decisions, and they have a pool of money of, I suppose, the government or something in that direction. So if these guys don't want to, I assume they want to spend as little money as possible on lawyers, so could they just say, okay, our jurisdiction is Panama or whatever? And like, how easy can they do that? And what is that downside?
So with regard to a project that wants, like, is a kind of a DAO, an association that wants to collectively invest, it's really hard to save money on the legal side. It doesn't seem suggestible to me. To be honest, I wouldn't say there is a solution for this kind of thing. This is a kind of a red flag. Collective investment is something that is regulated in all the jurisdictions.
But at the end of the day, everyone wants to save money, and even in the real world, people want to save money. But there's a difference if you buy a Toyota and if you buy a Ferrari. Two costs a different price, but at the end of the day, if you want to save money, you might get something poor. And in some ways, I think sometimes in marketing we get it often because everyone believes they can do marketing on their own. It's like, we're going to bootstrap this, we can do it, we can bit, but I think in legal is really one of the areas you don't want to be saving money on because
Yeah, absolutely. How can you choose a jurisdiction? Can you just say this DAO is now based in Panama? Or how does it?
That's a
legal
bit
knowledge is
tricky,
very-
but yes, you can to some extent. And with regard to the centralized project, for example, we have now, we were talking about companies, but companies is not the only type of legal entity. There are also associations and foundations. And for example, the DAO, in my opinion, an association is a good forum for them. And they could establish an association with a jurisdiction that has, let's say, a more powerful legal framework for them. Foundations as well, you know, in Switzerland there are a lot of foundations that manage decentralized projects. Usually foundations are done this way. So we create the project, we create the blockchain, we create 100 million tokens, okay? We keep some tokens for ourselves, and then we establish the foundation. What is the treasury of the foundation? 60 million tokens, okay? So these tokens are inside the foundation, and the foundation is bounded by the scope that is written in the statutes, and will spend these tokens only for the development of the project. This is a typical setup of a decentralized project. This is impossible to comply.
Thank you for the first time I get this now.
Okay. Thank you. Yeah, please, last question.
Yeah, I guess it's quite a simple question. Is it quite easy for a company to move jurisdiction, especially with the legislation changes?
Yeah, I would say yes. Then it depends to the jurisdiction and also to the dimension of the company. If the company is a big company and you want to change the jurisdiction, you have to open an office in the jurisdiction and to have boots on the ground. If it's a ready-made project that never incorporated, it's easy because you decide where to go.
Cheers.
Wonderful. Thank you all for listening.